We're back. We're speaking today with Mr. Dave Kauai, also known as Hawaiian Dave. Dave is the owner of Triangle Estate Planners, and he's giving us a lot of information about what we need to do to protect our estate. So, Dave, my next question for you is, you hear a lot about trust planning. What's so important about trust planning?
Well, there are all kinds of trusts designed to accomplish all sorts of various objectives. For example, there are spendthrift trusts, which can protect your estate assets for your spouse or children from creditors and from themselves if they need time to mature in their handling of their finances. There's a trust which can protect assets for children from a first marriage so that they're not inadvertently disinherited because of a second marriage and no planning was done. There's charitable trust, which can benefit your family as well as your favorite charity. There's a revocable living trust, which can be a great tool in being able to have control over what happens to your estate after you're gone. Financially, there's a life insurance trust, which can provide needed dollars through life insurance to pay any estate taxes that may come due, but is excluded from your gross estate because of being in the life insurance trust. So there are many needs and different trusts to fill those needs.
How do you know which one to tell a person to invest in or to put their money in for safekeeping?
I sit down with folks and we do something called an complete estate analysis. We take time to see where they are now, where they've been, what some of their goals would be, and what their objectives are. And this generally takes at least one meeting to sit down and do a fact finder on that. And then we can come back and make suggestions on what trusts would be advantageous for them.
Are there companies like yours throughout the country, throughout the Triangle, throughout Orange County? Are you the only one in Orange County who does what you do?
No, absolutely. There's a lot of folks that deal in estate planning. Some deal more heavily in the insurance side. Some deal in the investment side. Some deal in the legal side. I basically I have one foot in each of those particular areas.
How old or how young should a person be before they contact you for estate planning?
Again, estate planning has three different phases. That first phase is you need to look at would be during the creation and accumulation phase. Me personally, I think a person, if they are old enough to have a job and to have children, they need to sit down and talk to an estate planner as far as getting the proper documents, things like wills, things like guardianships for children, and something should happen to them. So as young as a person in their 20s, probably.
And the information you're giving us, this is federal information, isn't it, or is it different state by state?
No, it basically it is valid in all 50 states.
In all 50 states. Mm-hmm. Dave, if someone want to contact you, please give us your contact information.
They can reach me at info@hawaiiandaves.com. My phone number is 919-698-8832. They'll get me directly there.
Give us that phone number one more time in case someone didn't get a chance to write it down.
That's 919-698-8832.
I've been calling you throughout this interview Hawaiian Dave. Let me just do a little veer and ask, why are you called Hawaiian Dave?
Well, basically, Sharon, I am Hawaiian. That's the first thing. And my name is Dave. And actually, several years ago, I got a passion for cooking. And my wife gave me a dehydrator for Christmas back in 2000. And what I did was I started making a gourmet beef jerky product that I shared with a lot of folks. And I called the name of that business Hawaiian Dave's Tropical Treats. And because of that, we enjoyed making that and sharing with folks here in the Triangle. And that name has stuck with me. I love the atmosphere or the ambiance that comes with that. Yes. I love to wear Hawaiian shirts. I love to wear my funny
big
Hawaiian
straw hat. Yes.
My straw hat. And of course, I don't generally wear that outfit when I meet with my clients.
That was my next question. I'm coming in for estate planning. I see a guy with a Hawaiian shirt and a big straw hat on. Maybe not.
No,
Thank you, Dave. You know time and place. Well, let's get back to some of the items you deal with your Triangle Estate Planners. I've heard a lot of talk about charitable remainder trusts. How do they work?
Well, basically, Sharon, what you do is you set up a charitable remainder trust legally. You have it drafted by an attorney. You donate an asset to the trust. You receive a current tax deduction on the projected remainder value of the asset when it ultimately will pass on to the charity. It works best when you donate an appreciable asset that is appreciated in value, because when you sell the asset and invest the proceeds, no capital gains are realized because it's in the charitable remainder trust. Let me give you an example. If you donate real estate that you purchased for $10,000 30 years ago and it's now worth $500,000, then you sold that asset personally, you would have to pay 15% long-term capital gains on the $490,000 gain, or $73,500. Instead, in a charitable remainder trust, that money can be reinvested while it's in the charitable remainder trust, and you can benefit by withdrawing a percentage each year of the total value of the CRT. You must pass a minimum of 10% of the original asset that you ultimately donate to the charity. And so, in effect, you can benefit from 90% of the assets or of that trust and any growth that it incurs during the term of the trust.
When did you get fascinated with all this, Dave? It sounds so complicated.
Oh, 1988.
1988.
I got trust planning back then.
Thank you. I'll ask some more about that later.
Okay.
So we were talking about the CRT, the Charitable Remainder Trust. What is the length of a Charitable Remainder Trust?
The maximum length it can be set up for is 20 years, Sharon.
20 years.
Yep.
Okay. So regardless of when you get into it, 20 years is the max. Whether you get into it in 25 or 65, 20 years is the max.
Absolutely.
Okay. Now, can I vary the percentage amounts I withdraw each year?
No, Sharon, the percentage is set up front. Basically, whatever you choose to begin with is what you have to live with.
Understand that. Well, what happens to the balance of the trust should I check out before the end of the term of the trust?
Well, most folks set up an insurance contract to equal the amount of the asset donated to the trust, so their heirs are not out of the value of that asset should they pass prematurely.
Okay. Now, can I set it up for multiple charities, or can I change the charities?
Yes, you can set it up basically on a percentage basis for multiple charities. However, if you want to change the charity, it can only be done if the charity is no longer a valid, qualified charity recognized by the IRS.
Dave, let's talk about the protection of our money. What are the rules for the FDIC insurance?
The amount of FDIC protection for interest-bearing accounts, Sharon, is $250,000.
$250,000. Dave, you mentioned IRAs. What's the difference between a traditional IRA and a Roth IRA?
Sharon, the major difference is the fact that with a traditional IRA, you contribute tax-deductible dollars to set it up front, and the monies withdrawn later are 100% income. With the Roth IRA, you purchase it with after-tax dollars. Then when you follow the rules, which are that it has to be open for 5 years, and you need to be past age 59 and a half, you are able to withdraw 100% of the monies accumulated, the basis that you put in, plus earnings, any earnings, interest earnings, plus any capital appreciation, totally tax-free. It makes it very attractive for investments that you may have that have potential for tremendous growth. For example, real estate, foreign currencies, precious metals, etc.
And that's the difference. Well, Dave, let's take another break. When we come back, let's talk some more about IRAs. Let's talk some more about what you're doing to protect people with the Triangle Estate Planners. You're listening to Today's Business. My guest today is Mr. Dave Kauai, Hawaiian Dave, owner of Triangle Estate Planners. We'll be right back.